And really, it's actually super simple, and this is what I do to take trades, and this is one of the biggest foundations that I use. The market moves in trends, and everybody knows this, where in a downtrend, we have a high, a low, lower high, a lower low, a lower high again, and then another lower low. And this is something called Elliott wave theory, where waves will typically move in 5 moves with a 1, 2, 3, 4, 5 wave structure. Now, this happens on multiple time frames. So with that in mind, one of the biggest secrets in trading is market will always return to its previous point. What do I mean by that? When we create a low and then we have a push down below that low, the market will typically come back to this previous low before having a continuation. What I'm looking for to trade is this move right here. Why do we want to trade this move right here? Well, because as you can see, we want to trade this point back to this point. We don't want to trade this first impulse move because this could be a fake out. This could be just the continuation of an uptrend. We don't have any previous points to go off of that. We have a push down, a pullback, another push down, and then a pullback to where? This previous point. Now, this happens on the 1 minute time frame. This happens on every single time frame. In trading, everything's fractal, which means everything happens on the same time frames. And you might be asking, well, how do we trade this? Okay, well, obviously we can't just push sell every time the market comes back to this previous point. We want to look for confluences. Favorite confluence that I love to use, and really the big part of my strategy, is using Fibonacci. If we have the market looking something like this, after we get this push underneath this low in a downtrend and the market pulls back to this level before having a continuation, what I do is I look for the previous high. Now, I use multiple time frame analysis to also do this. If the market is just kind of chopping around on the 1 minute time frame, but we're creating good impulses on the higher time frames, I look at those time frames to look for confirmation. After we create this first point, I take the Fibonacci retracement, I pull in a downtrend from this high to this low, and I want to see price retrace back into something called the discount zone, which is basically where sellers are looking for interest to enter into the market. So as you can see here, in between the 0.618 level and the 0.5 level, this little gap right here is a very high probability zone, and it's actually called the golden zone in Fibonacci, where price is very likely to return to this gap. If we can line up this Fibonacci retracement system with this previous low point, price typically returns to these points, remember, then that adds confluence to our trades. How else can we add confluence to this? Well, if we have a fair value gap right here on, let's say, a 5 minute time frame. If we have a fair value gap here, we have support at this level, and if we zoom out, we have other areas of support, like here on the chart, lining up with our 0.618 level. That gives us extra support where sellers might be interested. And this is really the gist, or the simplified version of my strategy.